RRSP deadline is fast approaching, and when it comes to making the most of your money, timing is everything. Peter Cishecki, President and CEO of Everything Financial, is here to explain why. Good morning.
Good morning.
Thanks for being here. So there is a common misconception that buying RRSPs gets your taxes down, and you have an anecdote about that.
It does. It puts you in a lower tax bracket, but think about this. We had someone we did some taxes for the other day, and he came in and bought $25,000 of RRSPs, and he was getting about an $11,000 and change refund. So he said, well, I have lots of RRSP room. I'll buy another $25,000 and I'll get $22,000 and change back.
Not the case?
Less than $200 difference, because what happens is you go from one tax level, say 40%, you buy too much, that might put you into a 20-something% tax bracket. That means all your money only gets that lower rate. So the conception we've been told for years, buy more, pay lower taxes, buy. And the problem is you end up in such a low tax bracket, the only one who's making more money is the government. See, RRSP deadline is like Valentine's Day.
Okay.
It's one of those holidays that's made up that we all get hyper and we spend lots of money, but maybe not always for the right reasons.
Without the chocolates and the flowers.
Exactly.
So is it important to keep an eye out then on our tax bracket?
Absolutely. I look at it as a completely different philosophy than most. It's trying to get the most bang for your buck. Work smarter, not harder. Just buy enough to stay in that high tax bracket. And sometimes you'll go to a lower tax bracket if it's 1 or 2% difference. That's okay. But if you're dropping 6, 7, 8% in taxes, that's like a year's worth of income on your money. You're ripping yourself off quite a bit.
I know you're a sports fan, and so let's make a sports metaphor here. When it comes to your RRSPs, don't play the short game, play the long game.
Play the long game, there you go. Look at it as a whole season, the big picture, not just going on like a 3-game stretch.
Yeah.
You got to look at the long haul, definitely.
Why is that?
You're really, it's part of doing a plan. Don't look at your RRSPs as just what am I going to save this year? What am I going to save next year, the year after? So instead of getting into the hype, last minute big purchase, start planning in March for next February.
Okay.
Start the plan now so you're not racing around at the last minute making an emotional buy. You're making a logical financial decision, and then you make a better decision.
Okay, let's end on the 5 Ds of taxation. I love these because it's easy to remember. So what are the 5 Ds?
The 5 Ds of taxation, you hit me with one there. Don't do, got me first thing in the morning, I'm thinking Olympics.
Yeah, deduct, defer, diminish, distribute.
Deduct, defer, diminish, distribute. And there was one other one I can't think of first thing in the morning. But deferring, that's what people don't realize about taxes. That's the most important thing. With an RRSP, they think, I'm getting a tax refund, I'm getting this, I'm getting that. You're not.
Okay.
You're getting, and it's most important, a tax deferral.
Okay.
You're stopping taxes now, not paying them now to pay them later. So we get back to that number.
Yeah.
If you're in a 40% tax bracket, and you're buying RRSPs, you're getting a 40% savings. What you want to do is when you cash them in, you want to try and be in a 20 or a 25% tax savings. There's the savings, 10, 15% on your taxes at the end, and all your money, the defer, you haven't paid taxes on it while it's growing.
Excellent advice when it comes to this season. Thank you, Peter. By the way, distribute. That was the last one.
Yes.
Deduct, defer, diminish.
Let's try that in the 8 o'clock hour.
Exactly. All right, Peter Cishecki. All right, thank you much.